everybody coming. This is a huge issue, not just for our community, but the state. We're kind of the epicenter of it, so it's important that we get as much input as we can. Let me first I want to thank the airport, Sarasota Bradenton Airport, for making this available today. Thank you. Appreciate that. It's always a good area because now I used to have 5 counties. I've got 2, so I try to do a lot right along university, so I treat everybody fair and the same amount of travel usually for everybody. The second thing, I'd like to thank our panelists. We've got a good cross-section of people that represent communities and neighborhoods. We've got 2 mayors here, insurance, mortgage brokerage. So I appreciate all of you being here today. And then I want to thank all the audience in advance for being here. Again, our goal is we're going to give everybody a few minutes to speak, and then we're going to want to get your thoughts and your input in terms of what we're doing moving forward here. To frame the problem is that in terms of flood insurance, we're hearing stories that as high as 400%, 300-400% increases in flood insurance. You hear as high sometimes as 1,000%. It's a real concern. In my congressional district, which is primarily the 2 counties, is about 30,000 people and businesses that are affected. Across the state of Florida, I chair the Florida delegation, so I'm concerned about not just here, but across the Florida. It's about 270,000. And it's not just here in Florida, it's also along the coastlines. It's even in Colorado where they had flooding the other day. My goal today is get your input because we're trying to pass some legislation that'll slow this process down. So that's my main purpose here today. People ask me, why are we in this situation with the National Flood Insurance Program? A part of it is because what happened with Katrina and Sandy, 2 gigantic storms. They're upside down. They're about 20, it depends whose numbers you look at, $20 to $25 billion in debt. We did have a bill that I supported about a couple of years ago that was supposed to do an affordability study before they launched anything. They didn't do that. They just went out and started raising rates on a lot of people. So we're trying to slow that process down. Our goal is, we met last week, a couple of weeks ago with 20 members of Congress, bipartisan. Maxine Waters is the lead on it, and so obviously from California. But our goal out of that, we've introduced legislation that'll basically give us 4 years. It shouldn't take that long, but have something that makes sense that we can roll out with the idea we get affordability study back within the year, 18 months. So that's our goal from that standpoint. I would just say a couple of points. This is at a point in time where I think our country is recovering from probably the worst recession of my lifetime. And I think things are getting better here, but it's still not where we need to be. I mean, it wasn't many years ago. We had 3% unemployment. We're still too high, but I think things are getting better, more favorable. I see reading about the malls and a lot of other things. But this is the worst time for a lot of people that are looking to buy a home, or I had a business the other day that had a closing, then flood insurance came up and the deal went south as a result of that. But it does affect a lot of people. You think of people who are on the water, just people that are wealthier, but there are a lot of people in flood zones, in communities where they've got maybe homes that are right at the ground level that they might lose their home or something else. If you're paying $500 a month for flood insurance or $500 a year, and it goes up 10 times, for a lot of people that means they're either going to have to sell their home or maybe they can't even sell their home. So we're concerned about that. Also, I would just say that we are going to have, I chair the Florida delegation. We have the 3rd largest delegation in the country. And on November 21st, we will be having a meeting, bipartisan meeting, Democrats and Republicans, ideally with the senators, to be talking about this, to move this thing forward. We want to try to get something done as quickly as we can. Obviously, people chuckle, say nothing ever gets done in Washington quickly, and many times doesn't get done. But I think this is something that impacts a lot of people. It's got to be dealt with. Otherwise, we put a lot of people at risk financially and everything else in terms of their homes. So with that, I'd like to let the panelists introduce themselves and quickly, and then just any comments that you want to make. And then I want to leave more than enough time for all our audience as well. Joe?
My name is Joe Adamitis. I'm the Vice President for Insignia Bank Lending Residential, and I'm also the President of the Gulf Coast Mortgage Bankers. Quick statement on this, for us anyways, is from both sides of my positions, in lending, it's changing the landscape dramatically. as Mr. Clapp will tell you, we pre-approve borrowers. Well, the first step we take now is to tell them to go out and find out where you stand in the floodplain. Because I can pre-approve you based on income, credit, and assets. And I can estimate a flood payment for you, which is what I used to do. I can no longer do that. When I see somebody paying now $3,000 as the prior owner, and a new person comes in and has to pay $30,000, that's a big issue for us. We do a lot of portfolio lending, and again, we look at the whole picture, and the flood insurance is a deal killer for us right now. And I'm seeing it across the board. Our buyers are on the fence. Many don't want to make a move. They don't know what's going to really be the impact. So for us, like I said, this is a big issue. It's going to affect our economy, the jobs, owners if they want to refi, sellers if they want to sell. Buyers don't know what they're getting into. And for us in lending, that's a big issue.
Thanks, Joe. Jim Brown, the mayor of Longboat Key.
Good morning. I want to thank Congressman for inviting us and bringing this to the public attention. This is a very serious matter that I've had some personal contact with this year. And interestingly, it has nothing to do with the federal flood insurance program, but the citizens, the doing away with citizens is causing just as much pressure on the individuals who own property in this state, and it's just starting to unfold. In January of 2012, my insurance went from $9,600 a year to $56,000. And that's because I was put out of citizens, and the only insurers in this state, and by the way, they're not very well qualified to insure, are just basically raping the public. There's not the proper regulation. We drove all the good insurance companies out of the state. They won't insure people, and we have a problem. But this flood insurance is just exacerbating the whole thing. I don't know what can be done about it. Mayor Monty and other mayors, we met last week with the governor, and the governor points out that the state of Florida, ever since the federal flood insurance program has been in place, we've been a donor state. We're paying 4 times what everybody else does, yet we're being punished at this point. And it's because of what happened to Sandy primarily, I think, and maybe in New Orleans. But the Congress has got to look at this in terms of what it's going to do. It's going to devastate this state. My wife and I want to sell our house, and we're afraid we won't be able to. It's really frightening.
Thanks, Jim. David?
Thank you, Congressman. My name is Dave Clapp. I'm the managing broker at RE/MAX Alliance Group, and I'm here representing the Sarasota Association of Realtors. Let me start off by saying the Biggert-Waters Insurance Reform Act of 2012 has been extremely detrimental to southwestern Florida real estate, especially in the high-risk areas, those that are A and V. Real estate transactions have been canceled, and it has created escrow disputes. Escrow disputes because the contract had not anticipated insurance rates going up so high, and so there wasn't a basis for cancellation. Canceled sales transactions have affected buyers, sellers, and especially loss of income for real estate agents. Short sales are falling through because flood insurance premiums are now so high, buyers can't qualify, and these short sales, which would have taken the property out of the market, now are going to cause a foreclosure to take place and put more bad properties into the market. Sellers have been forced to drop contract prices in order to hold together transactions, causing loss of income or funds to them. Buyers have stated that they are no longer willing to buy in high-risk areas. Investors have stopped buying because when they look at cash flow on many of these properties that they wanted to buy for investment purposes, they can no longer cash flow when you start to factor in $9,000, $10,000, $12,000 insurance premiums. Elderly individuals are in fear that they'll no longer be able to maintain their homes that they've had for many years. They don't have mortgages on them, but they can't afford the flood insurance on them, so they can't stay. They have to sell. There's great anxiety in our marketplace on what's happening now and what's going to happen in the future. Uncertainty causes paralysis and fear, neither of which are good. There's fear on the part of sellers that they won't be able to sell, or that there'll be loss of value, as the mayor just said, in the value of their home. We've seen a dramatic increase of listings per month. For example, on Siesta Key in October, there were 86 new listings. The average for the 5 months prior to that were only 47. And so we see people out of fear starting to put their houses on the market. Sales are slowing down, and activity for these properties that are in high-risk areas. We live in a supply and demand market. When the supply increases and the demand decreases, what happens to value? And that's what's happening to these homes. Buyers are unable to buy because when you have a $600 increase that has to be allocated to your monthly payment for flood insurance, what you could use to qualify for, you can no longer qualify for. The dream of home ownership of many people, many retirees for waterfront home ownership has been dashed by Biggert Waters by this act. Some have decided not even come to Florida because there's so much bad press. We're hearing people saying, I'm not even going to buy in Florida because I'm afraid of what my insurance rates are going to be. There's confusion in the marketplace and difficulties that are being created because of so much uncertainty. If people can't afford the flood insurance program, they're not going to buy. I hear anger. I hear anger from people. An individual said to me, I buy flood insurance now, and I'm not required to, but I contribute to the program because I want to be a good citizen. And they say, I'm not going to contribute anymore. I'm not going to continue to contribute when I don't have to. Some examples of some of the rate increases that we have seen. In Anna Maria, an individual bought 3 cottages. The insurance was $500 per year per cottage. It went to $5,000 a year, or $15,000 for the 3 cottages. To elevate those cottages in order to reduce the flood rate would have cost $10,000 to $15,000. On a home sale, the old rate was $1,400. It went up to $6,000 for the buyer. In order to keep that transaction together, the seller reduced the purchase price by $25,000 just to keep the transaction because they were afraid. What would happen if this sale didn't go through? Sales have been lost in areas that are low price. Sarasota Springs, where a premium was $7,000 in Sarasota Springs. Anna Maria Island, over $12,000. Buyers who bought a house last year, when the renewal came due this year, was $10,000. A 1,400 square foot home, $1,200 premium, went to $7,800. Home valued at $185,000. The insurance went to over $10,000, with $6,600 of it being the flood insurance. Premiums are difficult to quote, as I'm sure we'll hear from our insurance expert. We're getting quotes sometimes of between $600 and $6,000. An historical register home was $2,000, now went up to $9,000. A bayfront home was quoted $700 for flood insurance. 2 days before closing, that premium went to $20,000. Property in a V20 zone, the value was only $250,000. The old coverage was $2,400. It went up to $28,000. These are just several of the horror stories that are out there. We must change the Biggert Waters Reform Act of 2012 and correct the insanity. We need to restore reasonable rates with certainty for the future as to where rates will go. And we need to balance the burden across markets so the burden doesn't fall on Florida, which we've already heard contributes way more than the cost that it has incurred. Thank you.
Thanks, Dave.
I'm Mayor Monty at Holmes Beach, Florida, part of Anna Maria Island, for those that you don't know. And Vern, thank you for inviting us today. Don't have to reiterate a lot of the things that have been said because I think they're universal in terms of concern with regard to the insurance rates. The only thing I think I can add to that is I had a conversation with our building inspector, who is an architect and also very knowledgeable in the area of the FEMA regulations, which dictate a lot of these increases because they're out of compliance. And David mentioned some of these elevations that have been changed in various places in Anna Maria. We're in a floodplain, so everybody is, it's relevant to everybody with regard to the insurance cost. But I think one of the things that we have to do is to think creatively in terms of not just the insurance, but what we can do to mitigate some of the issues with regard to FEMA. When I say that, the example that David mentioned is some of these properties that went from 500 to 5,000, a $12,000 cost for FEMA to raise those houses would have also addressed the problem once and for all, not just 1 year. So we, I think, have to think about maybe collaborating with FEMA to work on the issues where they have monies available. And Tom, if you could mention the one area that's in Bradenton that also had a similar situation.
FEMA has a program called Flood Mitigation Program, where they provide funds to update or bring non-compliant properties into compliance. And along with the Wares Creek project in Bradenton, there were a number of homes where they provided funds to elevate them and bring them into compliance.
It's not on.
Is that better?
Yeah.
Now I can hear the reverb. Well, what he's alluding to is a FEMA grant for flood mitigation, which they go in and provide grant monies to elevate structures or to demolish them and build new compliant structures. And I think that that's a part of it. The reason for the insurance rate hikes is because they've been giving lower rates to non-compliant properties, but the real longer-term fix would be more pressure to get those mitigation funds to upgrade properties for homeowners so that they can qualify for the better rates.
So if we could add anything to the conversation today, it would be that aspect as well as trying to modify the insurance situation. So, thank you.
Good morning, I'm Jamie Morawski. I'm with Dick Johnson and Jefferson. Our agency is a multi-lines independent insurance agency, and I specialize in personal lines insurance. So I represent the insurance carriers, and I represent my clients in purchasing things like homeowners insurance, auto insurance, and flood insurance. So we all know, we've all heard some really great feedback on what the problems are. And to give a little bit more background information regarding the flood insurance, one of the problems that I see is owners of existing properties that have flood insurance that was rated with what they call subsidized rates are going to have difficulty selling their properties because prior to Biggert Waters, the buyer of that property could assume the seller's flood insurance policy without having to pay an increased premium or obtain an elevation certificate. Now, the buyer of that property, of that very same property, is going to have to get an elevation certificate completed so that their flood insurance policy can be rated based upon the data of that particular property, how low it is or high it is in comparison to the base flood elevation in that area. There are so many components that go into rating flood insurance. But essentially, if your home is built below the base flood level, you're going to pay a whole lot more for your flood insurance. So I think being able to assume the buyer or the seller's flood insurance policy was a big move forward in the real estate closing part of the process. Now, a policy that may have been rated at $2,600 a year for a seller, that property's flood insurance may be $5,000, $8,000, $10,000, or $20,000, depending upon the area that it's in. Also, owners of existing pre-firm properties that are not their primary residence that have maintained flood insurance faithfully are going to see large increases and will need to get that elevation certificate to renew. So you're affecting the existing homeowners in trying to sell their properties, and you're affecting the existing homeowners who have had flood insurance continuously. So obviously, as Dave stated, the older homes in flood zones are automatically receiving essentially a decrease in their market value overnight. Older homes in flood zones may be more likely to be purchased by cash buyers who are going to self-insure or look at that property and think the cash flow is not there. For me, as an insurance agent, when real estate sales slow, I sell less policies, and my economic contribution to our community is going to be decreased. My agency and all of the staff that works there earn money on selling policies and placing customers with the right coverage. If flood insurance is escrowed with your mortgage payments, and your premium drastically increases, it may be difficult for that person to continue paying their monthly payments. If they end up in foreclosure as an insurance agent, I'm going to lose that policy. So it not only affects the owners of the property, it affects the people who help them purchase their property or purchase their insurance as well.
My name is Paul Valenz, and I'm the first vice president of the Manatee County Community Associations. And what our federation does, as the name implies, community associations, we represent all the condo associations and all the community associations in Manatee County. We have memberships, both individual and community associations. What we do is we have a speaker. We meet 9 times a year. It's the 3rd Tuesday of the month, and we do not meet June, July, August, and December. But we do meet 9 times a year. And by the way, our speaker this coming Tuesday, November 19th, is Sally Tibbetts, happens to be Mr. Buchanan's district director, so she'll be our speaker. And it's at the Synovus Bank, so if you want a little more information on flood insurance and things, you're all invited. It's free. And what we do as an organization, when we meet, we take the issues that the associations have that they feel is important for the citizens of Manatee County to know, and we collect the information. We have a speaker most of the times. It's someone with influence on the county or issues that affect the county. And those people that are at our meetings, normally it's the presidents, vice presidents, and people representing the particular associations, they take this information that they gather and do what they see fit. They usually bring it to their associations and tell them what happened at our meetings. And then at the next meeting, they come, they talk to us, and they say, hey, Paul, here's something that we have to put on your agenda. We do every year, and we've been doing this for many years, and Mr. Buchanan mentioned the delegation that they're having in November. We contribute to that. We always give the list of things that we have not been able to correct, and we give them to the delegation, and they meet, and they tell us what they're going to do about some of the things. They don't take and change everything, but they've done a good job participating and making sure the citizens of Manatee County get what they deserve. Thank you.
Let me just say, I mean, it's obviously very obvious. If you look at what happened with Katrina and Sandy, those 2 storms, hundreds of billions of dollars. Florida hasn't had, in terms of a lot of flooding or hurricanes the last 4 or 5 years, but we're at the epicenter, and we're paying all these premiums. Not that others aren't, but we're probably paying more of the premium. I'm going to run down that number, but it's got to be a gigantic number. It's not just Anna Maria and Longboat Key. It's Wares Creek, where there's homes there that are $125,000, maybe $150,000 homes that are all at risk because they're in a flood zone. So if you've got a house that's $150,000, I heard a story the other day in South County, and that was the same concept. It's a $150,000 home near the water, on the water, in a flood zone. It's not built up. It's an older home, 40 years old, a senior person living in there, probably going to have to move out. So it's a very big issue. But I want to thank the panelists. And now I'd like to open it up to our audience. Anybody has a question, a comment for me or any of the panelists? Danny's got the mic there, so we'll let him.
Yeah, well, that was a good articulation of the issues that I think we all are aware of or feel in our experience. But the question I think falls to, my question I think falls to you, Congressman. What are the possible resolutions to this important issue? Agriculture, tourism, real estate are big components of the Florida economy, and so if you have some suggestions, I'd like to hear them. I must say also that I don't know what the Biggers Water Act is. if you could tell us.
Okay. Let me just make sure any of our audience that has a question, speak up. That was good, but just as much as we can so everybody can hear the question. What we're trying to do, we had a meeting about 2 weeks ago, 20 members, bipartisan, not just from Florida, but around the country. Maxine Waters was there. Actually, it's her bill with Biggards, who was out of Illinois at one time. They had a bill they put together on national flood insurance about 4 or 5 years ago. But we're running into the problem with that bill now because of all the deficits. But to get back, we met. I've co-sponsored legislation that'll basically slow this thing down, stay all the premiums to where they were, with the idea that we come forward with something over the next 3 or 4 years, but ideally much sooner than that, and something in terms of affordability. We can't, there's no way, we got to find a way that you can raise anybody's premiums 500 to 1,000%, let alone 100%. This has got to be something that's worked out over a period of time. But I need to get, the reason I'm doing this today, I need to get as much input as I can to be a force on that committee for Florida and for our region, because it will put a lot of people, in my opinion, out of their homes. There's a lot of people, I can tell you, that, you know, you read it in the paper, pay cash, and maybe they just say, oh, I'm going to self-insure. But there's a lot of people that they've got a home for 150, 100,000, or maybe the house is worth 100 they've got paid off. They want to finish out their life there. They love it. And those homes and those people are put at risk. And that's why we've got to address that in a big way. Sir? Yeah.
First of all, thanks for doing this today, Congressman Buchanan. I have a couple points I'd like to make. $25 billion in debt, FEMA. You know,
20 to 25 billion.
Okay, that's a huge number to all of us, but it's, let's face it, that's nothing in the numbers in the budget in the federal government. I don't know why it's become this sort of a lightning rod to create this kind of an issue. 25 billion, that's a part of a plane. You know, come on, that's one thing. Two, I don't have a lot of confidence in Washington, D.C. solving this problem, so I'm asking you and others to consider at least addressing the residents and citizens of Florida on this issue, instead of decimating citizens, which we went to when we had a problem with in Florida with our hurricane coverage and windstorm. We fixed it through that for those of us who had older homes and properties that no one else would insure. Expand citizens. Cover this for those things that, you know, we can do it. I mean, it worked too well, apparently, because now they're trying to decimate it. I had another, and again, when we're talking about this grandfathering, as things are usually done with these bills, and they're talking about grandfathering until it's sold, some of these older homes and all that, they provide that level of income housing for seniors and other people who can't come down here and buy $1 million home. And they're a housing stock, and there's still some excellent houses. I think maybe they should be grandfathered until somebody decides they want to remodel or rebuild it, not just when it's sold. And those are some things I'd like you to consider when you're dealing with this, because I don't think Washington, D.C. is going to solve our problem for us.
Yeah. Well, I'm hoping this is affecting a lot of coastal communities, not just Florida, but all up and down the East Coast. Everybody knows what happened in New York, Katrina, Colorado flooding. However, you make a good point. One of the things I'm going to do is pick up the phone, call the governor. I really do think that we need to look at all the options. It's not acceptable, people's insurance or people losing their home over insurance. So it's something that needs to be looked at. I know they like to phase it out, but if you got nobody to underwrite it, you know, this got to be a federal program or a state program. And the state's done pretty well, but as you remember, we had those 4 hurricanes, which would bankrupt the state. That's why at the end of the day, long term, you need a national solution. The dollars, $25 billion is a lot of money, but to the federal government, it's one thing when your budget's, you're spending $3.6 trillion. It's another thing at the state level when you've got, you know, 1/50th of that amount of money. But citizens might have to find a way to stay on the table, and because otherwise, you know, it would kill our economy and affect a lot of people and everything else.
Thank you. My name is Greg Watson.
Can you speak up a little, Greg, if you could? Appreciate
I'll
it.
try to. My first question is, I think that we need to go back and look at before 2010, when the wind speed loads were increased for Sarasota County. We went from 110 to 150, and I'm sure that's part of the reason why the flood zones have to be redrawn in order to encompass that new wind speed. My understanding on Longbow Key is that it's changed the elevation from 11 foot to 13 foot just to be out of the flood zone. A lot of the homes that are there now are basically at 8 foot high. That's 5 feet more for our house. I mean, there's no way we can just raise that up to make that work. So I did bring you the wind speed documentation. And then the other question I just received in the mail a couple days ago, Homeowners Choice has offered to try to become an insurance company for flood as well. And they have the insurance on our home now, so I think that having other insurance companies provide flood insurance for Florida would be a much better way to go about it.
Yeah, the more competition, the better, but unfortunately, a lot of them took off after, the four storms we had 7, 8 years ago. We haven't had much since, but it's a good point. I don't know about the wind loads. I know they've always been pretty intense out anywhere along the beach if you build anything new, but that's a good point from that standpoint.
Thank you very much for all this. I'd like to make a point that Mr. Monty made is one of the ways to reduce the premiums, okay, for those owners that are fortunate enough to not have a mortgage, to allow them to increase their deductible to a point that they drop their premiums substantially lower. Right now, the federal government maxes out the deductible you can take at $5,000. From my insurance agent, every $5,000 deductible you take out, it's equivalent to about $1,000 drop in your premium. So what that means is, if you're fortunate enough to not have a mortgage, instead of doing without insurance, you take out a $25,000 deductible, a $50,000 deductible to get the insurance rate down low. It seems that everyone I've run into, no one is aware of that this $5,000 premium deductible is controlled by law. Like any other insurance, the higher you can go, the lower your premium is going to help at least some of the people. Second thing is, I've always been in favor that the higher your building is, the lower your insurance. The situation I personally have is, my insurance is $4,500 a year. I am 3 feet higher than all my neighbors. They're grandfathered. Unfortunately, like the woman over there said, okay? But the biggest water tax at least solves that problem, that the higher you go, the less insurance you have. If you just automatically subsidize the lower rates without bringing the people that are higher in, it's an unfair situation. I don't know what the solution is for people that are lower. I'm sensitive to that very much, but the approach of paying less the higher you go. Thank you.
Well, thanks, and get that information to me.
Thanks. My name's Tommy Kochis. I live in a subsidized house, and I also sell insurance. I appreciate what the federal government's doing with the BW12 Act, and the flood program has to be fixed. The issue I have with it, it seems that Florida keeps getting hammered year after year, whether it's on homeowners insurance or flood insurance. My real concern, besides what they're doing with BW12, is it seems that what could happen with the map revisions. I live in a house that's in an A zone, okay, out on Siesta Key. What's happening out there is all of a sudden they're doing map revisions. Some of these homes haven't flooded in 50 years, and now they're getting pushed into a V zone where the premiums are tripling just because the zones are changing. It seems that the government is looking for funds because they're in the red, and it doesn't seem like a fair allocation how they're going about doing it. So even a bigger concern down the road is how they revise these flood maps, and what are they doing? How are they coming up with, okay, you've been in A zone for 50 years, you never had a flood, but now you're in a V zone. it seems that that's going to be a real problem in the future. So.
Congressman, could
Yeah,
Congressman,
yeah,
could
go
I
ahead.
speak to that
Yeah,
really
go
quickly?
ahead.
One thing that I think needs to be clarified a little bit is that if you are a primary homeowner in Florida and you've had continuous flood insurance coverage, your subsidized rates are not going to be impacted. Your zone will remain grandfathered. So it is the secondary homeowners that are going to be most impacted by the flood zone changes. Or someone who tries to sell their policy or a buyer of an existing policy, but not the primary homeowner who has had flood coverage in effect continuously.
Yeah, and let me just say, I'll just say this. My wife and I went to Miami Hurricane Center. I think I've been maybe 8 years ago, and then I was there 20 years ago. Someone said something about being a donor state. I think we're a donor region, because if you look at all the hurricane activity, and they track them back to 1925 that I remember, very few hurricanes, now Charlie's the exception, but historically very few hurricanes come back this way. I'd like to see the insurance companies too, is look at, because you're a lot more, got a better shot with a lot of these hurricanes coming out of Africa, the East Coast, or if they get in here, they run up north Tampa, or ideally north of Tampa, up in the Panhandle, Katrina, you know, that type of thing. So I think that's another thing that needs to be looked at. Yes, sir.
Yeah, do we need to start a sign-up sheet for a march on Washington?
Yeah. Yeah, we might. We'll see what comes up here a little bit. There's everybody else up there marching. You can kind of join in. But thanks.
May I just say that I was under the impression that it was going to raise 25% a year if it is your primary residence?
If
until
it's a
you
non-primary resident.
That's incorrect, because I have a non-primary residence that it went from $998 to $5,600.
I would need to look at the individual situation to see what
Well,
happened.
there's a lot of heads nodding in the room.
Yeah.
So I'm not the only
If,
one
if it's a
that's aware of this.
primary residence and they have had continuous coverage, they should not be getting the 25%.
So you're saying that their
adjustment.
coverage would be the same rate, it would be sustained?
No,
it's
not the
gonna
same
affect them
rate.
at all?
They're still going to have normal increases, but they won't be actuarially rated on renewal. They won't come off the subsidized rates, is my understanding of how the bill works.
I do not believe that's correct, and someone else may know more.
The only thing I'd suggest is take your policy to her. She'll get you a better deal.
Thank you for coming. The question I have is, based on the new legislations to delay the impact of this, can you clarify what is being delayed, the rate increase is being delayed, and how long that will last?
The bills, we're trying to delay it for 4 years. You know, maybe something in that time frame gets done. They need to do an affordability study and make it retroactive back to the current rates. So that's where that's at right now, and that's what the legislation we're currently pushing.
Right here, sir.
I'm Greg Vine from Venice, Florida, and part of what I'm hearing right now in this room, and I'd like you to take back to Washington, is my name is Greg Vine, I live in Venice, Florida, and what I'm hearing in this room is what I'd like you to take back to Washington is we need the facts, because we're hearing information right now, which I'm like this gentleman. I have been told on my own home, 27 years in existence, 25% of the full boat premium at maturity. So within 4 years, I'll be paying in the neighborhood of $5,000 to $6,000 for flood insurance. I've been told that over and over again. So if the facts are different, I'd like to get better facts in this room now, if we have people that can get us those facts.
Well,
Thank you.
We'll try to run that down. I imagine insurance companies, everybody has different ways of assessing it, but we need to get more facts. Yeah.
Okay. Yes, can everyone hear me?
Yeah.
Good. Congressman, I assume then that you feel that the federal government should continue with this program. You're not saying it should be broken down or not denationalized and just become a state-by-state program.
I think it's going to take a national solution. It's just my opinion. I think with a lot of these big storms, I mean, you see flooding in a lot of smaller states and other things, and it's not just coastal communities where a lot of the population is around the U.S. It's also places like Colorado and other places in the Midwest that have had a lot of flooding as well. So I think it's going to take a national program. However, I agree with the lady. I think under these circumstances, if we don't get it addressed fairly quickly, I think we need to look at it from a state standpoint and see if there's not an opportunity to deal with it.
One last question. There was obviously the flood insurance maps, the FEMA maps, in defining where a floodplain is being, it's being changed, so that's affecting the rates. Do you know whether the issue of rising sea levels is being factored in to these new maps? Are we going to have to revise these maps again and again and again? So that's my question.
Yeah. I don't think so, but that would be just my opinion on that.
Yeah, thank you, Congressman. Thank you. Appreciate the opportunity. I've lived in the same home on the bay for 30 years, and it's kind of like Thomas Jefferson. You got to remodel it every once in a while, new kitchen, that kind of thing. So there's always a little bit out there, and I'm being told that I have to increase my insurance, flood insurance, by $770 a month. So I'm hoping you get this thing
What
delayed.
is that at now?
Pardon?
What's your insurance at now?
Insurance is about $5,000 a year right now.
So it's $400 a month. They want to increase your insurance 200%.
Right.
Okay.
The other thing I don't understand is every time I've done a remodel, I always get the permits and get it done to current codes and zoning. So it seems to me, I don't understand how they can change that. Change the FEMA's changing, like he was talking about, changing the flood maps and the zones. I've got a neighbor who was fighting it. It's costing him a lot of money to have new maps drawn for the waterfront area that we're in. I think he's probably spent $15,000 to $20,000 already just to get it looked at, and they found out mistakes, a lot of mistakes in the FEMA zones. So I'm real nervous about what's happening to us. Okay. And it seems to me that, the Biggers Waters Act, or whatever it's called, didn't have a lot of thought going into it. And if you're saying they didn't do due diligence or vet it, I am amazed at what's happening.
I think it's just my opinion, when they put this together and then they get storms like Katrina and Sandy, hundreds of billions, all of a sudden, they're completely upside down. That's where it's at. So it all needs to be looked at, and, we're going to, I got to think, and this isn't a Republican or Democrat, I think everybody, my delegation, I chair, we're going to find out that everybody's going to be 110% out of Florida, a lot of these coastal communities, and everybody's getting the same stories. But this helps me to get these stories so I can be more passionate in delivering the message.
Right here, sir.
Yes.
Thank you again for your time, Congressman, and also thank you for your support for the bill that you just mentioned that would delay implementation of the increases for 4 years. Just a comment and then a quick question. It's my understanding that the language in the bill that would delay implementation currently doesn't address homeowners who would have already experienced increases. For example, I spoke with a resident the other day whose insurance went from $5,000 to $55,000, and
is that flood insurance?
Flood insurance, yes. It's right along the water, but that's just an example. And my understanding is that the language in the bill wouldn't retroactively allow them to go back to their old rates. So I would ask that you look at solutions for people who are already experiencing rate increases as you move forward with the bill. And then also a question that I have is, we understand that it's been difficult to gain support for this bill from some legislators in other areas of the country because it's not as big of a deal in places like Colorado and some areas out west as it is here in the Gulf Coast region. Would you be able to talk a little bit at all about what you've been hearing from your counterparts in other areas of the country, and if you think we might be able to gain support, enough support for this bill to get it passed?
Well, a lot of the population in the country, as all of us know, is along the coastlines by what happened in New York, Katrina. I mean, Florida, we're at the epicenter, so to speak, but there's a lot of other communities at risk as well. And I feel pretty good about it. At that delegation meeting we had one person or maybe two from Colorado because they've had intense flooding this year. You see a lot along the Mississippi River where there's a lot of issues. So, and these states can't handle it. They don't have the budgets or the background or insurance pool to underwrite it. So it almost needs to be a federal program. So I feel pretty confident about it, but it's something we need to try to get done quickly.
Hello.
Yes, yes ma'am.
My name is Pamela Lazaroff. I'm a resident of Holmes Beach. I live in a subsidized home. It was built in 1959. It is very modest. Its current value is probably $260,000. I pay $900 a month, and the current quote based on the old maps is $6,500. If the new maps go in, it'll be almost $11,000 a year. It is hard for anybody to come up with an extra $800 a month. I think Mary Landrieu out of Louisiana has done a good job putting a good face on this problem instead of everybody looking from the outside seeing Florida with $1 million homes on the water. So maybe we could take some hints from her on how to help represent Florida.
Well, I appreciate that because there are a lot of people, you think about waterfront properties and you just think about $5 million homes, let them go ahead and take care of themselves. But at the end of the day, there's a lot of people like yourself and others that are at risk. I mean, I'm up on Anna Maria a lot. I see a lot of those homes. A lot of the homes they've gone up, probably in the last year or so. But, $200,000, $300,000 homes, maybe they paid off, maybe they've lived there for 20 years, they don't want to move. And there's no way that you could raise someone's insurance $1,000 a month just for flood insurance. And most people have, some type of mortgage, so the bank's going to require that you get it. So it's not like even if you said, I'm not writing that, it's a ripoff, which it is. The bottom line is you're going to have banks with the mortgages are going to say, look, you need to bring this up to speed. So this is a big issue for not just people like yourself and others. It's a big issue for mortgage lenders and everybody else.
So, Congressman, based on what you've heard, wouldn't the proposed legislation make more sense to just scrap this whole thing for the time being so we don't have to live with all this indecision and all the fears and loss of business that you've heard about? Instead of proposing that we kick the can down the road for 4 years, let's propose to just go back to the way it was, and let's look at it a little further and reevaluate it. Because kicking the can down the road doesn't really solve anything.
Well,
for all
maybe
of
I
us.
misspoke. The bill says 4 years, but we're trying to find something that makes sense long term for property owners. No, we're lower the rates, but we've got to have it where it works for the property owners, people that are affected, areas like Florida that are affected, but also the taxpayers underwrite it. So it needs to be something that makes sense long term, but whatever we do needs to be incremental. It cannot be whatever they come up with. It can't be something where it's going up 500, 1,000%. There might be some kind of, there'll be probably some kind of increase, but we're going to have to take a look at and think outside the box. It's something that makes sense long term, because otherwise it would devastate, not just our community, but to the Florida and the country as well in a lot of different aspects.
My understanding is between now. Hold on a second. This is proposed legislation, right?
Right.
And so between now and then, don't we have to live with these new rates?
No, the bill, what we're trying to say is keep the rates at where they're at.
But when do you think we'll get to change and go back to that?
Well, I'm just trying to, we've got a bill, I'll give you a copy of the bill after or whatever, you can take a look at it and give me your input, or anybody can take a look at the proposed bill, look at it, and call my office, and we're open to changes or maybe amendments to the bill. But we want to get it right, but we want to make sure that we get it done quickly too.
Okay. Well,
thank you.
Thank you.
Good morning, Dwight McGee. I'm a homeowner in Holmes Beach. A couple questions, sir. The American people are watching over the past few years bills get passed by Congress without understanding the true impact. We need to pass it to see what's in it. Question for you, how could this bill have been passed in the first place without understanding the impact that it has on the industry? Secondly, from East Coast to West Coast and all up the Mississippi River, every creek, this probably affects millions and millions of deals. They're all on hold right now, from what I understand, until this is resolved. I know you've got a bill in front of Congress, but you've got 16 days left in this legislative session. Will anything be done this year?
I'm hoping.
Well, what does hope mean?
For whatever, I don't know. I mean,
will Congress move on this, or is the entire industry going to be?
Our goal is to get them to move on. Our goal is to get them to move on it by the end of the year, because there's a lot of people affected. These rates, a lot of them are put in place October 1st. So we've got to do something.
How could it have been passed in the first place without understanding impact?
Well, what we're talking about is delaying the increases. with the idea that we're going to take the time it takes to make sure, figure out what makes sense long-term. That's the idea, to do an analysis on it.
How could you have passed this in the first place without understanding the impact?
Well, we passed it with the idea of that they were going to do an affordability study. We had a commitment. They didn't do the study, and they just raised the rates. So that's why we're trying to change it. That's what happened.
Yes, sir. Vern, I appreciate you having this meeting today. I'm a primary home owner, and Jamie mentioned that the primary rates are going to stay the same. And I just talked to USAA. I'm a retired airline pilot and Air Force pilot. And my rates, I just paid them last month for the whole year. It's not going to increase. But they don't know what's going to happen after that.
Are you in a flood area, flood zone now?
I'm in the inlets, yes.
Okay.
And it's, I think we're 9 or 10 feet. And I've also talked to my son-in-law who has a place down in South Point, but it's a secondary home. And he's been told it's going to increase 25% this year and 25% every year until it reaches market value. Do you know what that means? He didn't know, and he's a developer.
Yeah, well, that figure, doesn't it? I mean, no, I'm not sure on that.
And this bill that you're backing, is it going to grandfather in people that have had their homes with existing rates for this year? And is it going to address the secondary market? One gentleman talking about kicking it down the road. I agree that we need to do away with the Waters bill. I think it was ill-conceived and not thought out very well. And I have backed many things that you have done, and I appreciate your hard work and service, and I hope you'll continue to get to the bottom of this. There are a lot of people that are hurting. The real estate industry is going to tank, and foreclosures, banks, everyone's going to be hurting and losses of jobs, and I know none of us want that, and I know you don't. Thank you.
And thanks for your service, being Veterans Day. Let's ask the mayor. Wayne Poston's here. I figured we'll give him an opportunity. He's been the mayor and done a good job in Bradenton for a long time. So,
yeah, thank you, Vern. And again, thanks for being here. This is a critical issue for us. We have a piece of property in Bradenton on the river, 24 acres. Went into foreclosure when the economy went bad. Now there are people looking at it. Since the announcement of these rates going up, that deal is stone cold. And we like those kinds of developments to happen because it lowers everybody's taxes when we have more people on that tax roll. But this is a critical issue for Florida, critical issue for us, and we just appreciate you fighting for it.
thank you. I'm going to take a couple more questions, and then I'll stay around to as long as anybody wants to stay around. But let me get 2 more questions.
Can I say,
12 o'clock.
can I interject something here? Right here.
Yes, sir.
Yeah. I have a scientific study that was done in October of last year, October 2013. I'd just like to read a couple of things here. Florida has the second largest coastline in the United States at 1,350 miles. The insured value of property in the coastal counties of Florida is $2.9 trillion. Approximately 80% of the state's total insured value of the property. Now here's something that we can slow this down. Can't slow it down today, but in the future, a lot of these developments built on the water, those waterfront properties have been there for thousands of years. Developers buy them, they spend millions of dollars trying to get things passed so they can build all kinds of buildings on the water. Now listen to this. About 2.4 million Floridians, that's more than 12% of the entire population, live within 4 feet of local high tide. It's amazing. Sea level rise projections showed us plausible that there will be an increase of 4 feet by the end of the century, with approximately 80% of the state's 19 million residents living or conducting business near its coastline and its coast-dependent economy. The state has so much at stake as it prepares for the impact of the sea rise. Now, my suggestion is that we slow up some of the developing because that's contributing to the high rates of insurance too.
Thank you. Okay, a couple more questions. Yes, sir.
Frank Lovell from Osprey. Where do I go to get a copy of the existing law and the proposed?
Let me just say, to get a copy of the existing law and the proposed law, you can go to our Sarasota office or our Bradenton office. And if you've got a story that you didn't get a chance to share, you'd like to give us your thoughts and ideas, you could drop an email or drop it off at either of those offices. We'd like to get that input because, that bill could change a bunch before we get down the road. And I'd like to get as much of the input as I can from the community. Thank you.
Last question over here, sir.
Yes, my name is Mike Burke. My home was profiled this week my home was profiled this week in the paper. My insurance went from $2,000 to $16,945. But what my biggest complaint is that the way that the law is written, it's based on being in a flood zone seems to be the predominant issue. The home's never flooded, but more importantly, most of us would agree that the value of the home is based on its proximity to land, not the home itself. And so I think that needs to be a really important consideration in giving your insurance premiums, is that so much of the value of the home is escalated because of the land itself, which isn't going to go anywhere if it's flooded.
Let me just ask you, your insurance was $2,000, did you say it
Yes,
was?
sir.
And it went to how much?
$16,945. That was option A. Option B is $18,700. If I wanted to increase my coverage to just $170,000.
And are you on the water?
No.
How far are you off the water?
I'm three. It's a zone A. I realize I'm in a flood zone.
Yeah. Okay. And what's the property values in that area roughly?
This home is I bought it for $315,000.
So 315.
But the insurance value is $155,000.
Yeah. So you got the house at 155, and you're paying almost 10% or better, 12%, just in terms of insurance. And that's the face of what we're talking about here.
And essentially, I'm just saying, the value is really in the land, not the home. And that's not going to go anywhere if it's flooded.
Yeah. But again, I appreciate that. But okay, I appreciate everybody coming out. I'll be around if anything you want to leave us or our staff. Let us know, Sarasota or Bradenton office, any of your thoughts or input. We're going to go to work on it hard. Thank you.
Thank you very much. Appreciate your time.
Kids, one graduate.